to sort of put our views in context of what Keith and the team are doing, they're obviously more focused on rates of change going into Q2 in the latter part of Q1, where they're forecasting a quad 4 environment. Leisure is not really in that environment. Right. A lot of the benefits from the consecutive quad 2s we had coming out of COVID, I guess we're still in COVID, can't really say coming out of COVID, but the whole, liquidity at all-time highs, household balance sheets in great shape, like those are somewhat lagging from what Keith's and the team are working on, but the leisure industries haven't had a chance to benefit from all that good stuff. And you got the easy comps, and you got generally pretty cheap valuations.
So it's like we've started talking about MicroQuads, right? So leisure's in MicroQuad of quad 1, quad 2. But the other good thing too is if you look historically, our two favorite subsectors are the OTAs and regional gaming, right? So if you look at, just isolate those two, not only are they kind of in a different quad sense than the macro, not that macro is, going to take a back seat or anything like that, but also like if you go back and look at quad 4, and you've put the numbers together, regional gaming and OTAs actually outperform in quad 4. They do horribly in quad 3. That's like the death zone. But they do okay in quad 4. So whereas hotels do not. Right. So I think we've got a little bit of a buffer from the overall quad analysis. And I'd say that the second thing outside of the leisure is regional gaming, which I think it's fascinating because this business, I think the OTA business has changed for the better. Alternative accommodation. You can see with Airbnb and Expedia owns Vrbo, and Booking has their own alternative accommodation. So that business has clearly gotten a lot better after COVID. But the regional gaming, because both on the top line and the bottom line, top line with demographics, because younger people are going to casinos now, which thanks to the states wanting tax dollars, they kept the casinos open and closed everything else, right? Because they take a tax off the top line. So there's a huge, it'd be a huge problem if they had to give away all that tax revenue. So they left the casinos open, and millennials like you started going. You already went. Yeah. Degenerate.
Primary research.
I hope you're not expensing those losses
out of the expense budget.
So like you've had this demographic shift where the millennials started going to casinos, and they actually like the product, right? And you can see it in, we always ask the question to management teams, are you still seeing millennials coming back to the casinos because they've got these guys in their database now, right? Yeah. And the answer is like yes, and it's happening. And yet we had another quarter where the revenues were really strong despite Omicron in the fourth quarter. Mm-hmm. And the other part of the business model that's changed is the cost side, right? So we've gone through this a million different ways. Like they realize that casinos, number one, have the highest margin of all the different functions versus food and beverage or hotels or whatever. Second is that they don't need some of that other stuff, right? So buffets and other things they don't need. So the cost structure is way down. But the thing we've been battling, and these stocks, went down. They peaked in Q1, and then they kept going down despite good numbers. And part of that was sports betting, which we had a negative thesis on, and still do. And DraftKings is on our short list. But part of that was due to sports betting. But also we just fought that sustainability argument, right? It's all pent-up demand. Top line's going to moderate.
Stimulus.
Federal stimulus, exactly, good point. And then on the cost side, they're going to bring back, giving away the free cars and bring back the buffet. And none of that stuff's happened. And then these guys all put up, good fourth quarters. And the stock's finally reacted. It's like, it's a turning point. But the good news is, I think the next part of the story, which you and I have talked about ad nauseum again, to use that word, but the free cash flow part, right? So, estimates still need to go up. But you're starting to see, I think, investors appreciate the free cash flow angle, which we've been harping on for a good 6 months. We did that regional deck. And the point there is...
no one cared for 6 months.
No one cared.
But now everybody really
to care.
does.
Well, I think it's because of the buybacks.
Yeah.
Right? So Red Rock did it first.
It's real now, right?
Mm-hmm. When Red Rock did it, they actually outperformed. Their stock outperformed in Q4. Boyd announced one in Q4, but didn't pull the trigger. We didn't know they pulled the trigger until they announced their earnings, said they bought back stock in Q4. They bought back stock in January. And look at that stock, all-time high. It's the best performing gaming stock, or maybe in GLO, one of the best performing stocks. And then you've got Penn, which they've gone one step, and that's to announce the buyback. They haven't gone to the next step, which is, well, we don't, they may be doing it right now,
Yeah.
which is to actually start purchasing shares. And I think that's when
They probably are.
they probably are. I would well, look, our thesis, you've got a CFO there that's very savvy in terms of the street. She used to work on the street, Felicia Hendricks, and I've known her for years. She's really smart, and I think she, she gets it. Like you've got this huge free cash flow. You just don't let it sit on the balance sheet, right?
No.
You can buy your stock at cheap and really compound that growth, generate higher free cash flow per share, obviously higher earnings per share, which is I think another thing people are going to start focusing on. So Penn, I think, is the next leg for Penn is going to be, wow, they actually are buying back stock, because historically they haven't been that type of company.
Because they can. They're a year away from sports betting being a money generator and positive cash flow generator for them, whereas no one else really in the industry is going to be in that position. I guess BetMGM and maybe FanDuel, but
still later. Like
later,
Penn's going to be,
they'll be the
first one.
everybody,
Yeah.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there, subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.